Imagine you decide to start investing today. You open YouTube and watch a video. Someone says, "This stock will double your money." Then you open social media. Another person says, "The market is about to crash." A few minutes later, you see someone showing huge profits from crypto, AI stocks, or trading. Now you're confused. Who should you listen to? What should you invest in? And what if you make the wrong decision? Most people think the biggest problem in investing today is inflation, high interest rates, or market crashes. But the truth is different. The biggest problem in investing right now is information overload and constant distraction, and it's causing millions of people around the world to lose money without even realizing it. Let's talk about why. Years ago, investing was much simpler. People would buy good businesses, invest regularly, and hold their investments for years. Today, things are completely different. Every day we're surrounded by information, news websites, YouTube videos, social media posts, podcasts, market predictions, expert opinions. And the problem is that everyone seems to have a different answer. One person says buy, another says sell. Someone predicts a recession, someone else predicts a huge bull market. As investors, we end up consuming so much information that we stop focusing on what actually matters. Instead of following a plan, we keep changing direction. And when you're constantly changing direction, it's very difficult to reach your destination. Problem 1, chasing the next big opportunity. One of the biggest mistakes investors make today is constantly chasing the next big thing. A stock goes up 100%. Everyone wants to buy it. A cryptocurrency starts rising. People rush to invest. A new trend appears. Suddenly, everyone believes it's the future. This happens again and again. The problem is that by the time most people hear about these opportunities, the biggest gains have often already happened. People aren't investing because they understand the asset. They're investing because they don't want to miss out. This feeling is called FOMO, fear of missing out, and FOMO can be very expensive. It causes investors to buy at high prices and sell when prices fall. Successful investing isn't about chasing what is popular today. It's about making smart decisions and sticking with them for the long term. Problem 2, social media creates unrealistic expectations. Let's talk about social media. Every day we see people posting screenshots of huge profits. We see stories about someone turning a few $100s into thousands. We see luxury lifestyles, expensive cars, and claims of financial freedom. But there's something important to remember. Social media usually shows the wins. It rarely shows the losses. Nobody likes posting screenshots of the money they lost. Because of this, many new investors start believing that making huge returns is normal. They think if they're not doubling their money every few months, they're doing something wrong. But real investing doesn't usually work like that. Most wealth is built slowly. The world's most successful investors didn't become wealthy overnight. They became wealthy by staying invested for many years and allowing their money to compound. Unfortunately, patience doesn't go viral. Excitement does, and that's why so many people get distracted. Problem 3, emotional investing. Another huge problem is emotion. Markets go up, people become excited. Markets go down, people become scared. And those emotions often lead to bad decisions. Think about what happens during a market crash. Prices fall, news headlines become negative. Everyone starts talking about risk. Many investors panic and sell. Then, months later, when the market recovers, those same investors buy back in. In other words, they sell low and buy high. Exactly the opposite of what they should be doing. The market rewards discipline, not emotions. The investors who stay calm during difficult times are often the ones who achieve the best long-term results. Problem 4, lack of patience. Today's world moves very fast. Food arrives in minutes, movies stream instantly, messages are delivered in seconds. Because everything is instant, people expect investing to be instant too. But wealth creation doesn't work that way. Investing is a long-term game. It takes years, not weeks. The most successful investors understand this. They know that time is one of the most powerful tools in investing. The longer quality investments have to grow, the more powerful compounding becomes. Unfortunately, many investors quit too early. They expect results too quickly, and because of that, they never experience the real benefits of long-term investing. The solution: So how can you avoid these problems? Here are 5 simple rules. 1. Ignore most market noise. Not every headline deserves your attention. Not every prediction deserves your trust. Focus on facts, not fear. 2. Have a clear plan. Know why you're investing. Know your goals and stick to your strategy. 3. Stop chasing trends. Just because something is popular doesn't mean it's a good investment. Do your own research. 4. Invest consistently. You don't need to predict the market. Regular investing over time can be incredibly powerful. 5. Think long term. The greatest advantage most investors have is time. Use it. Don't let short-term market movements distract you from long-term goals. Conclusion. So, what is the biggest problem in investing right now? It's not inflation, it's not interest rates, it's not even market volatility. The biggest problem is the constant stream of information that keeps investors distracted, emotional, and impatient. The people who succeed are usually not the ones who know the most. They're the ones who stay disciplined when everyone else is reacting. Because in investing, success often comes from doing simple things consistently for a very long time. And sometimes the smartest move you can make is to ignore the noise and stay focused on your plan. If you found this video helpful, hit the like button and subscribe for more content on investing, personal finance and building wealth. And tell me in the comments, what do you think is the biggest problem investors face today? I'll see you in the next video.